Hi, I'm Tekoa De Silva with Sprott Global Resource Investments, and I'm sitting down here today with Miles Thompson, Director of Reservoir Minerals and CEO of Laura Exploration. Miles, good to see you.
Likewise, pleasure.
Yeah. So it's good to have you here, and I'm pretty excited to be sitting down with you. I think there are some really interesting things that are going on in your market that I'd like the person watching to hopefully learn about. But to start with, for the person that might be joining us for the first time or learning about you for the first time, who are you, what do you do, and why is your viewpoint significant to the resource and then the exploration investor as well?
Okay. I'm a geologist by training, and I've been a businessman in exploration business now for probably 20 years. So I started a prospect generator privately in Brazil in the early 1990s, and with the assistance of Rick, listed part of that business as Laura Exploration in mid-2000s. So I've been doing this for a fair while. In terms of cyclicity of this market, this is my fourth cycle, I suppose. So I've seen a lot of the ups and downs in this business. I've run businesses through good years, I've run businesses through bad years. And I think the general public, people who invest in this space, tend to very badly underestimate the timelines involved in the exploration and the mining business and how to survive and prosper through these markets. So I think the experience I have of doing that is probably one of the more valuable things I would bring to a conversation like this.
Miles, based on your experience and observation in the resource business, when do you buy, when do you build, when do you explore in terms of the cyclicality that you mentioned?
Yeah, I mean, I do think it's very important you understand where you are. I mean, there's probably two elements to the markets themselves. One is volatility and the other is the cyclicity. So the last really deep bear market was from 1997 to 2002. So before most people's investing memories in this space. And that tends to make people be very worried about this kind of market. Whereas the reason you should look at this kind of market as being what it is, which is a spectacular opportunity. You've had a filtration process, so all the idiots and the companies that don't have good assets, the ones that don't really either know what they're doing or have failed to do it anyway, are turning into zombie companies or they're going into a different sector. And you're distilling down really the most resilient and competent management teams and the best projects into a much smaller universe of companies that are the cheapest they've been in 15 years. So I don't know how much longer this bear market goes. Personally, I'm hoping a little bit longer. I've got a lot of stuff I would like to do while things are still cheap.
Miles, I think that we could easily say, well, in this market one should buy because things are cheap. But if we look at maybe the granular details of it, more specifically, what are you hoping to do, and what would you like to do here with this market?
I think this is an excellent time to buy. I think there are two things that you really need to understand as you make your choices of what to buy. One is survivability. There are a lot of companies in the resource space that may not survive the next 3 years. So you need to look very carefully at the way the business is structured and will it be good enough to last? And the other thing is to understand that the next bull market is 3 to 5 years. So you cannot buy expecting to reevaluate your position once a quarter for the next 12 months and decide when to sell. You need to take bets now that you're going to hold for a little while. What I personally am doing is more on the asset side. I have bought a few remarkably good value shares over the last year or so, but I don't manage a fund of money. I have a little bit of my own money that I would be able to speculate with, but what I'm trying primarily to do is to add assets within the companies I run. So I'm looking at projects, I'm looking at, if you will, exploration real estate that is currently very, very cheap or for free in this market.
I'd like to ask you a little bit more in detail about both of them, but from a surface level, tell us a little bit about reservoir and Laura exploration.
Yeah. I'll start with reservoir minerals because that's been the one that's been most successful. We've been working in Serbia now for more than 10 years, which gives you a sense of how long these things take to do. I originally went in working on tender processes, so auctions if you will, when I worked for Goldfields, and there were 4 bidders, which included ourselves, Phelps Dodge, and a couple of other companies. We lost, but ended up working together with Phelps Dodge on contesting the tender process because it hadn't been very transparent. And we formed a relationship, and then we both subsequently went back and picked up exploration areas in the belt. When Freeport took over Phelps Dodge, they dropped a lot of that exploration ground. But we worked together subsequently with Freeport, and they said, listen, if you can consolidate the district, we'd love to do a joint venture with you. And after the crash in '08, so we talked about cycles, so 97 to 2002, this cycle now, but in addition to those deep, longer term changes, you have volatility. So in terms of resource investing, 2008 was volatility. So all of a sudden, everything collapsed, and we were able to pick up the property that had been owned previously by Phelps Dodge, where we've made the discovery with reservoir minerals, for nothing. It was a royalty deal only. So where we now have a $200 million interest in a Freeport joint venture was on a property that cost us nothing.
When you say nothing, are you speaking just towards accepting the carrying costs of that property?
Yeah.
Literally for nothing?
It was after the crash in '08. The company that held it was in trouble, and we just did a deal in exchange for a royalty.
What was the climate of the region like, or the country itself? Did that have an impact on the deal at all?
Yeah, it was what made the deal possible. The Boer district has the biggest and richest copper mines in Europe. They've been mining there for 100 years. So their operations and their resources are obviously not of the quality now that they were 100 years ago. But it is an area that has produced a very large amount of copper. I forget the exact numbers, to be honest, but it's kind of 10 million tons of copper, 10 million ounces of gold, historical production. So very substantial. Those order, not exact numbers, but that order of magnitude. You would never get anywhere near that kind of mine in Arizona or the Andes. But because that region had been part of the Soviet bloc, they'd then have a civil war and Yugoslavia broke up. It was, let's say, a complicated place politically. But that complexity had left all of this ground available. That was the opportunity. To take that political risk and go in because you just had such good quality real estate that it was going to be worth the risk.
Is that kind of political risk setup something that you regularly see in the resource business?
It's one of the ways to invest. So if you look now in this very bad bear market, a lot of investors are retreating to Canada, to the US, perhaps to Chile, because they're just so afraid of everything that they retreat back to absolutely the best quality in terms of country risk that they can possibly afford. But what that means is that you overpay for everything in those places. You can acquire something that gives you a much better leverage to success by going into somewhere that is a little bit more sketchy.
Speaking of places that are politically challenging to operate, Laura exploration, some parts of South America, Brazil, how did the assembly of that company come together?
I worked in Brazil on and off for 30 years, so I have a very long-standing relationship with the country, some of which has been good and some of which has been bad. We decided originally to list the portfolio as Lara because my previous cycle in the 1990s, I had put properties into 5 different exploration companies, and in each of the 5 cases I hadn't been paid properly. So I thought this time round I would prefer just to have control of it myself. We follow the prospect generator business model just because it reduces substantially the risk, and then we've further diversified. So I suppose a lot of my career was spent doing precious metals, particularly gold, but we made a conscious decision when we started to be more diversified, and we've actually made a lot of money with agricultural minerals. We've had some success in obviously copper and nickel as well, and then we've diversified as well by country. We're primarily working and perhaps more agile in Brazil and Peru, but we have some nice projects in Chile and Colombia as well, and we've been opportunistic there. They're 4 of, I suppose, my preferred countries in South America in terms of maturity of politics and the ability to get stuff done. None of them is perfect. They all have their challenges. And again, you know, I'm more excited about Lara than I have been in a very long time, because all of the countries' currencies have devalued so much that it's become cheap to operate again. So at the top of the commodity boom, it was expensive to work in Brazil as it was to work in Canada. Now the currency's devalued, all of a sudden it's become very accessible again. And at the same time, there's very little activity, so property is available for staking, property is available cheap for acquisitions, and geologists are available to work with you that were busy 3 to 5 years ago.
Miles, I spoke with a gentleman on your team, Dr. Simon Ingram, and I heard him mention that land is coming available that you see maybe once every 10 years, and more importantly, there's no competition. So is that something that you see pronounced in South America, Brazil?
I think it's pronounced everywhere. I've tended to be most successful where I have the most knowledge. So I use that opportunity mostly in places I understand well. Because I think in any business, and not just the mining business, I think any business you have to have an edge in order to be successful, because the world's full of smart people and money. So you have to know something that other people don't if you're to differentiate yourself. I have, for instance, in the Carajás in Brazil, the portfolio that has made Lara successful, at least on the portfolio side, took me 10 years to put together, and it's the second one I built. The first one also took 10 years. So you go back to those places where you have the quality of the targets, and time the cycle a little bit. I mean, I remember looking at some iron ore assets in Brazil back in the 1990s where you could have bought the whole lot for $500,000 at the time. They subsequently went into a deal with Ike Batista for $100 million, and then was subsequently sold for $5 billion to Anglo American. And I'm pretty sure that deal took only half of that ridge. The other half of the ridge was owned by the same original vendor, and he was obviously offering it for $100 million at the time in the probably 2007, 2008 period. I bet you anything you could buy that for $500,000 again now. So our business is a little bit weird. When people decide to go into commodities, a lot of money tries to go through a very small gap, and the price of things becomes silly. And then you get markets like this where all of a sudden people just do not want to know, and the value is what you're willing to pay.
We are having this conversation at the location of the Sprott-Stensbury Conference in 2015. I saw a presentation that you gave to a packed house, and you spoke to the risks of exploration and mitigating those risks using a certain business model, prospect generation. How do you view the world today when it comes to making discoveries of new deposits of resources? How is that risk changing?
There's no question it's getting tougher. I mean, the obvious stuff that was sticking out of the ground has been found. I mean, we've been doing industrial exploration and mining since the Roman times, possibly a bit before. So there's been a couple of thousand years of people walking the ground. You can go to places, remote areas, primarily, and perhaps still find something really spectacular at or near surface. But for the most part, you're looking deeper and you're using much larger investments in drilling and technology to find things. And because you can't actually see them, the risks have gone up. So the average cost of discovery has gone up substantially, and the numbers of discoveries being made has also dropped substantially. It's a much, much tougher world out there. You know, when I look at the exploration business, I mean, I'm a geologist by background, and I have my preferences. I see things that I get enthusiastic about, but I have much more faith in process than I do in my own enthusiasms. It is such a high-risk business that you have to have a business model that makes sense. So, I mean, my whole talk at the show has been about prospect generators, because if you look at Rick's statistics, he's been a pioneer in this space. He's backed 54 companies, half of which have made discoveries, and another half of those or more have been bought out. So you go from something like a 1 in 1,000 chance of success of individual prospects to a 50-50 chance in a prospect generator, basically following process. You're able to turn over more properties, you're able to test more targets, you are substantially increasing the odds of success.
Miles, I want to ask you about the formula that you've found to create value for other people, for society. And I know that we're talking about this in the context of resources and discovery and making a discovery, but when it comes to on a human level, the characteristics that you need to have, discovering the formula that's unique to you, what is that to you, and what did you go through to learn it?
Well, I mean, I think that's not something you can really teach. It's the University of Hard Knocks. Everything, I mean, you're of Brazilian descent. There's a lovely expression in Portuguese, que não mata engorda. Whatever doesn't kill you makes you stronger. And I think that you go through different processes and you learn and refine what it is you do. I mean, the spectacular thing about the exploration business is that you can go out into a new area, or possibly deeper in an area you already know, and find something of huge value for almost nothing. I mean, the value add of a mineral discovery is spectacular. You can literally spend a few thousands of dollars and tumble across something that's worth billions. So I'm driven by curiosity. I mean, I love what it is I do. When I try to define it as an activity to people, it's somewhere between detective work and treasure hunting. So you need the optimism and enthusiasm of a treasure hunter, and you need to be the detective using your geophysics, your geochemistry, all the science we now have available to us to look for clues that guide you to the treasure. And you know, we live in a very sophisticated world where a huge amount of value is assigned to an application for a telephone or some piece of software, but commodities are the basic building blocks of humans. I mean, we each consume several million pounds of commodities through our lives, be it the building blocks of the houses we live in, be it our cars, our fridges or telephones or whatever. I mean, we are, each of us, even the most environmentally friendly and liberal and anti-mining of us, are huge consumers of commodities. So we are one of the basic building blocks of modern society in what we do.
Miles, for the person watching that is looking to invest in resources, exploration or development, or a more mature part of the sector, where do you start? How do you prepare yourself?
I think it's very much a knowledge-driven business. And what I find, even a lot of people in the business don't really understand the business. So when you dig down into the technology side of it, into the actual mechanics of the business, it is a very complex thing. So to think that you can understand the science from the get-go is a little bit optimistic. So I think you need to start by being well advised. You need to go to a brokerage house like Sprott that is specialized in the resource space, that has geologists like Andy Jackson, Neil Adshead, that are performing that due diligence for you, and you have people that understand the volatility and the cyclicity of this market that can guide you through it. And then I think I personally find these conferences like this, like the one we're attending today, spectacular, because you gather such a group of professionals. I mean, obviously I'm here pitching my own stories and my own business, but I'm always stimulated to talk to my peers and other investors in the space, because you just learn so much. So I inevitably come away from a conference like this with ideas of my own, both for investment and things that I might care to apply to my business.
Miles, in winding down, do you think there's anything we may have missed?
Yeah, I mean, I think you've covered it pretty well. I guess I would repeat, it's a cyclical and volatile business. This is the cheapest it's been in 15 years.
Miles Thompson, Director of Reservoir Minerals and CEO of Laura Exploration, thank you for sharing your comments with us.
Been a pleasure.